He's the executive director at Axis Capital and specializes in autos. He's joining us from the sidelines of the Axis Capital conference, which is also going to concentrate on automobiles. Ashish, good morning. Before you start the conference, what is the sense you are getting? Is there a return of strength and demand to the two-wheeler space? That was the one that saw maximum distress in the past couple of months.
Yeah, hi, morning. So, the two-wheeler space actually has, positively surprised us. It was the most impacted for demonetization, and, after a very weak November and December, volumes are almost back to normal in Feb and March. So that's actually positively surprised us. We are actually in a position where, in our conference right now, this is our third annual auto conference. We have some 17 companies participating, a good blend of OEMs, ancillaries, dealers, and financiers. And, the investor interest has been extremely high. I don't know if it's a function of the stage of the cycle for two-wheelers and the other segments, or just the liquidity in the market, could be both. But the investor interest has been very, very high. The view is, among the investment community, that you do have the next 3-4 years could be very strong for the sector. And, while the entire sector will do well, it's still relatively undiscovered who can be the biggest beneficiaries among the sector. So, this is a platform that we generally have every year where, investors can come and sort of cherry pick.
Ashish, hi, good morning. The space that has really flared up lately is the tyre space. What could be the reasons for that? And within that sector, any top preferred picks that you have for long-term investing?
So, I can't discuss, individual stocks for compliance reasons. But the tyre space, see, there's been one underlying trigger for the tyre space, and that's mainly the fact that valuation for, a variety of reasons has always been lower than the other auto ancillary packs. So, you have, tyre stocks which are trading at, 10 to 12 times forward earnings, whereas the entire auto ancillary pack is anywhere between 15 to 30 times. So that's been that's been one support for the sector, which is why no one has, any discomfort as far as valuations are concerned. Yes, for the tyre space, one trigger has been the fact that, the replacement market has done pretty well. Post-demonetization, a lot of Chinese imports haven't done as well as they were doing earlier. So that's been an advantage for the tyre companies domestically.
Okay, auto ancillaries, what are your favorites in that space? What kind of auto ancillaries?
So, so from a segment point of view, we have no preference between four-wheelers, two-wheelers at the moment, because we are in a mid-cycle where I think all segments will do well. Unlike early cycle where commercial vehicles do much better, in a mid-cycle, I think you can see steady growth for most segments. In the auto ancillary pack, see, our view's always been that, the auto ancillary space is a good way to play the sector for a few reasons. Firstly, it's market share agnostic. Secondly, there's a trend of rising content per vehicle, vendor consolidation, and there's a huge aftermarket potential. And, to our mind, the theme for the next 5 to 7 years are, Indian autos meeting global standards of safety and emission. So, without, taking names, any auto ancillary that's contributing to that meaningfully will benefit, over the next 5 to 7 years. So, there's a view that, if you're playing, let's say, two-wheelers or four-wheelers or commercial vehicles, to play it via the auto ancillary because it's outperforming the segment. And for most of the companies, so our conference is more skewed towards auto ancillaries because the investor demand has been so high for them. They're all on, pretty excessive capacities, because, they have mistimed their capex, in the down cycle. So, and at the moment, they're in a pretty strong free cash flow and ROC expansion cycle, which is what's supporting valuation as well. One constant, pushback we receive on auto ancillaries is that valuations are, much higher than it's historically been. But it's not a case where it's justifiably so, because, it's in a very strong phase of free cash flow and return on capital.
All right, Ashish, point taken. Thanks a lot for joining us. Good luck with the conference. The pre-open rates have settled, and I tell you something, the Bank Nifty clearly is not as enthused as the Nifty is, up 0.4%, 21,237 on the Bank Nifty, and the Nifty up 45 points, again slightly more muted compared to what the SGX indicated. Ashwani, if we have an open around 91.30 on the Nifty and 21,230 on the Bank Nifty, for the day you still go long, intraday?
You would go long, but as I said earlier, that you will keep expectations modest, and maybe post the first hour, the rally will not be probably as hard as one may have expected had there been bigger shorts in the market.
Okay, a couple of more stocks that you might want to look at. Some of these infrastructure names are picking up on the back of positive comments that came in from Nitin Gadkari on achieving the 30